All right, let's talk about Pinterest's latest quarter. What we've got here is a classic tale of two companies in one. You have this incredible growth story happening all over the world, but at the same time, its most important market, the US, is hitting some serious speed bumps. So we're going to break down whether their big bets on international expansion and AI can actually fix the problems at home and what all that really means for you as an investor.
So, if you're trying to wrap your head around Pinterest's quarter, it really just boils down to these three things. First, the international growth is absolutely booming, no question about it. But that's clashing with some pretty worrying signs in their core US market. And then, to top it all off, the company gave some cautious guidance for the next quarter, and that's really got investors on edge. Let's dig into each of these.
Okay, let's start with the bull case, the good news. And really, this whole story is about their global expansion and the momentum they have with users. This is exactly what the optimists are pointing to.
First off, a huge milestone for the company. Pinterest just crossed 600 million monthly active users around the world. But what's really telling here isn't just the big number. It's the fact that this is their 9th straight quarter of hitting a new all-time high. That shows this isn't just a fluke. They have real, sustained momentum in attracting people to the platform.
So where is all this growth actually coming from? Well, this chart lays it all out pretty clearly. The US and Canada, their home base, grew by a pretty modest 4%. But look at Europe, up 8%. And then the rest of the world surged by a whopping 16%. The engine of user growth, without a doubt, is international.
And this right here, this is the slide that gets the bulls really excited. It shows that international revenue isn't just growing, it's absolutely exploding. You've got a 41% jump in Europe and a staggering 66% in the rest of the world. The key thing to see here is that these revenue numbers are growing way faster than the user numbers. That means Pinterest is getting much better at making money from each of those international users.
So you hear the CEO, Bill Ready, and he's not just talking about being a social media app anymore, right? He's very deliberately positioning Pinterest as an AI-powered tool for shoppers. And that narrative is so crucial. He's trying to convince investors that the platform is an essential utility for people who are ready to buy something. And that's exactly the kind of audience that advertisers are willing to pay a premium to reach.
Okay, so that's the good stuff. But now we have to flip the coin and look at the other side of the story. Because while that global picture looks fantastic, the situation in Pinterest's most profitable market is a lot tougher. And this is what's really giving investors some heartburn.
So you see that headline number, 17% global revenue growth, and it looks pretty solid. But when you peel back the onion, you see that the US and Canada are really dragging things down, growing at just 9%. Now, for a market that delivers the vast majority of your profit, a single-digit growth rate is a real cause for concern.
And management isn't shying away from this. They're telling us exactly what's going on. The CFO, Julia Donnelly, points to moderating ad spend from large U.S. retailers. Basically, these big companies are getting squeezed by things like tariffs, their profit margins are under pressure, and when that happens, the first thing they often cut is their advertising budget. So this is a bigger economic issue, but it's hitting Pinterest right where it hurts.
Now this slide, wow, this really tells the whole story. It's both the biggest problem for Pinterest and, if you're an optimist, its biggest opportunity. Look at this. An average user in the US and Canada generates $7.64. A European user, a little over $1. And a user everywhere else, just 21 cents. This massive gap just shows how incredibly dependent the company's bottom line is on that slowing US market.
So, you've got this huge gap in monetization and slowing growth in your main market. How in the world are you going to fix it? Well, according to management, the answer comes down to one big bet: artificial intelligence.
Their key initiative here is something called Performance Plus, or P+ for short. You can think of it like an easy button for advertising on Pinterest. It's an AI-driven toolkit that automates a lot of the complicated parts of running an ad campaign to deliver better results. The real target here is smaller and medium-sized businesses that don't have these huge marketing departments.
And is it working? Well, the early data looks pretty promising. The company is saying that retailers using these new P+ campaigns are seeing a 24% higher lift in conversions compared to their old-school campaigns. You know, for an advertiser, that's a hard number that proves this new AI tool is actually delivering the goods.
But here's the real kicker. It's not just about getting better results. It's about getting advertisers to spend more money. CEO Bill Ready points out that the smaller advertisers who adopt P+ are increasing their monthly spending 12% faster than those who don't. This is Pinterest's game plan for growing their U.S. revenue beyond those big, cautious retailers we talked about.
Okay, so this brings us to the final piece of the puzzle, the thing that ties it all together for an investor, the outlook. This is where the international promise and the U.S. reality collide, and it helps explain why the market reacted the way it did.
And this is where things got tricky. After putting up that solid 17% growth in Q3, the company guided for 14 to 16% growth in the fourth quarter. Now that's the all-important holiday season. And for Wall Street, any kind of deceleration, even a slight one, is a red flag. They want to see acceleration, so this projection was enough to send a chill through the market.
But here's the company's comeback to that. They're basically saying, hey, look at the underlying engagement. It's growing way faster than what we're actually charging for. Clicks to advertisers were up 40% in the quarter. That's huge. It means users are taking action, but Pinterest feels it isn't capturing the full value of that action yet. And they've got a proof point. Just look at how international shopping ads have grown from 9% to 30% of their revenue in just 2 years. They believe they have a playbook to close that value gap.
And so this is the tug of war for any investor looking at Pinterest right now. The international growth story, it's real, and it's really impressive. The slowdown in the US, also real and definitely concerning. The entire investment thesis really hinges on this one question. Can that booming global business grow fast enough and become profitable enough to offset the headwinds in their most important market today? That's the billion-dollar question.